This is the briefing for Friday, August 28th. Well, we had quite a roller coaster in today's trading. Kevin Warsh, the Fed chairman, new Fed chairman, spoke at Jackson Hole today, and I'm not really sure that he really said a whole lot, but it appeared that the market took it as being the potential for a higher probability of interest rate increases going forward. And that's demonstrated pretty significantly. You can see the volume here. This is the spiders on a 60-minute basis. So you can see as it started out, as he started speaking, it was taken positive, but then whatever he said at this point in time, certainly the selling came in. And we came back and tested the breakout point at the 768 area. Same thing happened with the Qs, coming back, retesting the breakout area at 715. But is represented by the Russell. This is the IWM representing the Russell 2000. You can see that we came up and tested the upper extreme at 300, but then the selling hit, and not only did it hit and bring it down, but it broke through the lower extreme right in the 297 area. So, and then we got a pause for the rest of the day. So it's going to be very interesting to see how the market interprets the comments after traders go home and think about it and think about the impact on the market. Now, a lot of times, if you get a big move in one direction or the other, they'll think about it, come back the next day or on Monday in this case, and will completely rethink what was said after listening to it or reading about it. And we could see another complete reversal right here. Now, I will say this, it is often that we get a breakout from an area of rotation and there's a retest of the breakout point. So you can see here that we had a breakout here yesterday, and then we came back in today's trading, retested the breakout point. Same thing with the Qs. You can see we broke out, they came back and retested the breakout point, which was resistance yesterday or day before yesterday, and then is support now. Didn't get the same thing with the IWM. You can see it tested the breakout point, didn't really break out, and just automatically began selling off going into the close today. So what happens is a lot of times, and this probably a higher probability, but there's always a smaller probability that it won't be the case, would be for the market to break out, retest the breakout, and then you get a really good move back in the same direction as the breakout. That's what I'm going to be looking for on Monday, or watching anyway. Now, the keys here are going to be what happens between the 770 and 771 area in the spiders. If that's traded through, and we're seeing an increase in market breadth specifically and volume, then that's going to suggest potentially this whole move is going to get retraced once again. And the same strategy would play forth with the Qs, breaking out about the 718 area from this area of rotation would open up the potential to test the upper extreme, or the high of today, which comes in around the 724 area. In terms of the IWM, we're going to be watching what happens right around this 297 area. If that were to occur, we might get a rotation back through the range. The Russell is looking just very, very weak at this point in time. Now, the other alternative here is a breakthrough support. And if we break through support, then that's going to open up the possibility of trading all the way back through this range. So we want to watch that very, very carefully. The key to Monday, especially if we break higher, is going to be 1, volume, and 2, market breadth. As you can see in today's trading, the S&P 500 was 44 shares negative in market breadth, meaning 44 more shares were trading lower as opposed to higher. In the NASDAQ, 1,791 shares trading lower as opposed to higher. What I would suggest with this is that there were some higher weighted stocks that had earnings yesterday and or the day before, and those stocks are carrying the index, because with that much negative breadth, it would have suggested that we should have broken through this upper extreme here, and potentially have closed this gap and been somewhere down in this area here. So the NASDAQ was fortunate to hold up the way it had in today's trading. So I'm going to be watching that very, very carefully. Now, volume was not great today, but as you can see, I'm going to be watching very closely what happens with market breadth, especially if we begin to trade above this intraday rotational pattern, this intraday rotational pattern here as well. Strong breadth and a trade above that is going to suggest moving substantially higher. In terms of the daily chart, now you can see this while we broke out in the hourly time frame and the daily time frame, we're in the process of making this rotation back up. So you can see the rotational pattern here with an upper extreme at 760. I'm sorry, 780. That would be the that would be the upper extreme, and that would be the target should we break above that shorter term rotation and the intraday rotation I just talked about. On the other hand, if we break to the downside and break through this area right through here, then that's going to suggest that the potential is to trade down and test the 760 area, which is this level right through here. And then we would have to see what would happen because we may get another rotation back up again. You can see total volume on the spiders was very weak. 52-week highs minus 52-week lows, negative 42 shares. And you can see this is NYSE breadth. You remember that S&P breadth was negative by about, I think it was 44 shares. That NYSE breadth was negative 435 shares. Those really are not weak numbers, but they're not positive for a market that wants to go higher. But the Nasdaq is just really surprising. This negative 1792 in market breadth for the Nasdaq. Volume ticking up slightly in the Qs. I think that's due to the higher weighted stocks. And then, of course, in the Russell breadth, Russell volume ticking up slightly, negative 500 shares. Once again, that's not a real negative number for even for the Russell to see this type of a move that we saw. So it's going to be interesting to see what happens on Monday. Going to be watching that short-term chart pretty carefully. Now, I typically want to know where we are on a daily basis, and then from a tactical perspective, I look at the hourly chart to see where I'm coming down and kind of zeroing in on what's happening on a little bit shorter time frame, and then I look to make my trades based on a 15-minute chart. So I would be changing all these from a 60 to a 15-minute chart, and then looking for trades there as well. Looking at where we are in terms of overbought and oversold, we're still basically neutral in the NYSE and getting to a point of being slightly oversold in the Nasdaq. Once again, that's a little surprising based on how negative Nasdaq breadth was, but we didn't get that big of a price move to the downside. In terms of total volume, you can see total volume is very low in the NYSE, ticking up nicely in the Nasdaq, but most of that was selling volume, as you can see right through there. And in the NYSE, you can see negative selling volume there as well. So this is not a strong market from an internal perspective. So it's going to be important to, if we do get any additional movement to the upside. I mean, it was pretty clear in today's trading that when we opened, that breadth was basically negative in the S&P 500. You can see right there, breadth was negative 204 shares. So I mean, it was pretty obvious that unless something changed internally, that it was going to be difficult to hold the gains that the market was trying to project throughout the day today until they finally capitulated. Now, I want to cover one more thing because I think it's important, is the percentage of shares trading above their 20 and 50-day moving average. This is the 20-day and this is the 50-day. Now, if you remember, I talked about this previously, and it is really it's really looking at the internals of the market, not looking at a high-weighted average, but just what's happening from an internal perspective with the majority of stocks. And even if we see a move that's being carried by the higher weighted stocks. At some point in time, if the majority of stocks are not following and they're moving in the opposite direction, they will eventually weigh and outweigh as collectively the higher weighted stocks. So this is something that is becoming very concerning to me. This is the percentage of stocks on the S&P 500 above the 20-day moving average, and this is the percentage above the 50-day moving average. In terms of the NASDAQ, you can see what's happening here, and look at what the extension that we got down in today's trading from basically here to here based on negative breadth, but yet the NASDAQ price held up fairly significantly based on the very weak internals. Percentage of stocks above the 50-day moving average in the NASDAQ still declining as well. And finally, in the Russell really getting hit with negative 738 shares, only 738 shares trading above the 20-day moving average and only 963 trading above the 50-day moving average. So pretty weak market from an internal perspective, but it's going to be important to see what happens right here on Monday. That's going to be the real watch for coming up on Monday. Now, I want to point out one more thing, and this, I talk about, over the last several briefings, I've talked about some trades that I've made, and I kind of show, how I got into them and why I got into them. Let me get to the right chart. Okay, this is a stock that I have held for a while. I've been in it and got out as it exploded higher. It retraced some. I got back in it again, and I got out yesterday. Now, I want to say something about this, is that this is a low volume stock. Today's volume was only 1,143,000 shares. So, this is something that I just did not focus on when I made this when I got out of the trade today. I did not want to get out of the trade today, but I had looked at this and I thought I don't use stops on low volume stocks because they go and get you. And this is a daily chart. This is a 15-minute chart. So I put a stop in right here, right around the 16 level. And then I decided, based on this move here, that I didn't want to see that candle retrace. So I put a stop in at 18 and moved my stop up for that trade. And this is what happened in yesterday's trading. You can see that the market began to trade higher, then it went lower, and it went right. Guess what the low was for yesterday? The low for yesterday was 18. So they went down, they got my stop, and then look what happened. So fortunately I stepped aside and said, okay, I'm going to wait and see what happens here. So I'm going to look to get back in this trade, and if we trade above this level right through here, once again, I want to see that we're going to be able to take this high out. I want to see this move completely retraced. You can see that on this candle here, this was a candle where neither buyers nor sellers could gain control. But look what happened with volume. Volume kind of exploded on that candle. That gives me an indication that this may have been an exhaustive candle. So we may see some more movement above this level in Monday's trading. This stock ticker is OMER. And I just wanted to show that because this was my error. And in a low traded stock, it's difficult to have a close stop. And I was getting a little bit greedy, decided to move my stop up. And they certainly taught me another lesson and came down right to 18, got me, and then the buyers stepped in and drove it all the way back up again. So keep that in mind if you're trading and you're using stops for a low volume stock. It was a good reminder for me. Have a great weekend, and I will pick this back up on Monday.